As of 10:26 a.m. Eastern Time, Monday, November 3, 2025, Iris Energy, ticker IREN, is trading at $69.23. That's a gain of $8.48, or nearly 14% on the day. But that live price doesn't even begin to tell the story of the morning. The stock opened at $73.07 and immediately rocketed to a new 52-week high of $75.73 before pulling back to this $69 level. The volume is absolutely staggering, with nearly 32 million shares changing hands in the first hour of trading, already matching its entire 30-day average. The expectation for many who follow this name was a simple one. IREN is a Bitcoin miner, and its stock will trade as a high beta proxy for the underlying crypto asset. The reality, delivered in a pre-market bombshell, is that this company just fundamentally altered its entire investment thesis, and the market is now scrambling to reprice what IREN actually is. This morning, the company announced a massive 5-year cloud services agreement with Microsoft, valued at $9.7 billion. This isn't a pilot program. This isn't a small test. This is one of the world's largest corporations anointing IREN as a critical infrastructure partner to help build out its artificial intelligence capacity. The market has been pricing IREN as a crypto miner that happens to have data centers. The reality is that IREN is now an AI infrastructure company that also happens to mine Bitcoin. This $9.7 billion deal provides Microsoft with access to IREN's high-performance NVIDIA GB300 GPUs. And to sweeten the pot, Microsoft is making a 20% prepayment on the contract, which works out to approximately $1.94 billion in cash upfront. This completely changes the narrative. For months, the street has been focused on Bitcoin's price, the crypto halving's effect on margins, and IREN's cost to mine a single coin. That entire conversation is now secondary. The new conversation is about annualized run rate revenue from AI cloud services, and it's a conversation that has analysts scrambling to update their models. We saw that update in real time today. Cantor Fitzgerald, which was already bullish, raised its price target from $100 all the way to $142, citing this very deal. This isn't just a mild outperform rating, it's a statement that the firm believes the stock has the potential to more than double from even these elevated levels. This is the kind of move that turns a stock from a speculative play on a digital asset into a core holding in the fastest-growing sector on Earth, AI infrastructure. But here is the tension in the chart. The reason the stock screamed to $75.73 at the open and has since pulled back to $69. This deal, this massive expansion, is not free. To fulfill its $9.7 billion contract with Microsoft, IREN simultaneously announced a $5.8 billion deal with Dell Technologies to acquire the necessary GPUs and ancillary equipment. This is the reality check. You cannot become a major AI provider without spending colossal amounts of capital. This $5.8 billion hardware purchase comes on the heels of the company raising $1 billion via convertible notes just last month. So the new expectation is massive growth, but the new reality is also a significant increase in capital expenditure and leverage. The pullback from the day's high is the market trying to digest this. It's the bulls who see the $9.7 billion in revenue battling the bears who see the $5.8 billion in cost and the new debt. This is what's creating the churn and the 32 million shares of volume. This is no longer a simple buy for your SoFi Invest account. It requires a much deeper understanding. This is the kind of complex, catalyst-driven event that professional traders at Interactive Brokers live for. Let's look at the recent movement to put this in context. This isn't a one-day story. Anyone holding IREN in their Fidelity brokerage account or even on the Robinhood app has seen a meteoric rise. The 52-week low is $5.12. The high, hit today, is $75.73. This is a stock that has already delivered well over 1,000% returns for those who got in near the bottom. The chart has been in a steep, consistent uptrend for 6 months. This morning's news wasn't just a random event, it was the confirmation of a strategic shift the company has been telegraphing. They have been expanding their data center capacity, particularly in Texas, and talking about high-performance computing and AI cloud services. The expectation was that they might sign a few small clients. The reality is they just landed one of the biggest clients in the world. This is the difference between a company like NVIDIA stock, which sells the hardware, and a company like IREN, which is now deploying that hardware at a massive scale for a hyperscale client. It validates their entire business model of building and operating next-generation high-power density data centers. For those who are new to the story, let's briefly cover what IREN Energy does, or perhaps what it did. The company started as a sustainable Bitcoin miner. It's an Australian company, but its main operations are in North America, with large data center campuses in locations like Childress, Texas. Its whole pitch was that it used 100% renewable energy to power its mining operations, making it an ESG-friendly way to get exposure to the crypto space. This was their identity. They built massive infrastructure, secured huge amounts of power, and became experts at running data centers at maximum efficiency in often remote locations. The market looked at that and saw a Bitcoin miner. The leadership of the company, however, looked at that infrastructure and saw an opportunity. They saw that the same high-power density data centers built to mine Bitcoin were perfectly suited for the next wave of computing, AI. The same GPUs, the same power agreements, the same cooling infrastructure. They were already in the right business, they just needed to sign the right customers. Today, they proved they could. This strategic pivot is what separates it from the pack. It's no longer just a crypto play, it's an infrastructure play. This is the kind of dynamic situation where many retail investors might be looking for investment help or considering Schwab Intelligent portfolios to manage this kind of volatility. A self-investing approach in a name like IREN requires conviction and a clear understanding of the shifting narrative. Whether you're using Fidelity mobile app to check the price or the full interactive brokers trading platform to analyze the order book, the story is the same. Pure chaos as the market reevaluates. The company's future is now split. It still has its Bitcoin mining, which provides a solid, albeit volatile, cash flow stream, but the real growth, the story that gets a $142 price target, is all AI. This is a moment where you have to ask yourself what you believe. This company is fundamentally shifting from a Bitcoin play to an AI play. Comment below. Are you here for the Bitcoin, or are you here for the new AI cloud business? Looking ahead, the tension between expectation and reality will only get more intense. The immediate catalyst is earnings, which are scheduled for this Thursday, November 6th. The expectation for that call has just been completely reset. No one will be solely focused on the Bitcoin production numbers or the mining efficiency. The only thing that matters will be management commentary on this Microsoft deal. Analysts will be pressing for details on the revenue recognition, the deployment schedule for the Dell hardware, the financing terms, and most importantly, the expected annualized revenue run rate from this new AI cloud division. This is where the company can either confirm the new bullish reality or stumble on the execution details. The risk here is execution. IREN is not a small company, but it's not Microsoft. It just signed a contract worth more than half its previous market cap and took on a hardware purchase order that is also enormous. Can they manage this growth? Can they deploy 200 megawatts of IT load at their Texas campus on time and on budget? This is the new question. This isn't a stock you just buy and forget, like some Fidelity mutual funds or Fidelity ETFs. This is an active, high-stakes story. It's far more volatile than an Apple stock or even a Tesla stock. So as we watch the price consolidate around the $69 mark, down from its $75 high, but still up massively on the day, the picture is clear. The market's expectation for IREN was that it was a boat tethered to the price of Bitcoin. The reality revealed today is that IREN has cut that tether and is attempting to build its own nuclear-powered engine. The $9.7 billion Microsoft contract is the proof. The $5.8 billion Dell purchase is the cost. The $142 price target from Cantor is the new bull case. The upcoming earnings call is the first major test. This is no longer just a story about crypto. It's a story about power, infrastructure, and the high-stakes race to build the backbone of artificial intelligence. The expectation was simple. The reality is complex, expensive, and potentially transformative.